Hello there. We are Green Target e-commerce accounting team. And we are back with our 5-step bookkeeping series. After all has been done, we are now in the last step of our 5-step bookkeeping setup. And that is organizing the chart of accounts. Well, you can organize your chart of accounts at the beginning of the setup, if you already have your ideal chart of accounts or you are from a previous working system with a chart of accounts ready. But if this is a new setup, or you don't have your ideal chart of accounts, we can add your categories or accounts as needed when adding the transactions. Then after the transactions are all added, we can refine your chart of accounts. The first source is the profit and loss statement, which is a financial report that summarizes a company's revenues, expenses, and profits or losses over a given period. A profit and loss statement shows a company's ability to generate sales, manage expenses, and create profits. What are the common profit and loss accounts? We will start from top to bottom. First, the income or sales accounts. These are your revenue accounts. Service-type businesses has sales or service income. E-commerce or wholesale and retail businesses has sales of product income. Rental properties has rental income. Amazon sellers has Amazon sales. Second, direct cost accounts are costs directly associated with the revenue generation activities. For service-type businesses, it is cost of labor. For product-based and e-commerce businesses, it is cost of goods sold. Other direct costs items include shipping costs, storage or warehouse costs, supplies and materials, packaging costs, and e-commerce platform costs. Third, operating expenses are expenses you incur with running the business. Here is the list. Selling expenses are all expenses related to making a sale or increasing sales. Common examples are advertising and marketing, promotions, samples, shipping and delivery, website costs, and salaries or commission of sales personnel. Administrative expenses are the expenses related to managing the business. Examples are payroll expenses, consultation fees, legal fees, management systems, and accounting fees. General expenses are all expenses which do not fall directly in the first two mentioned above. Examples are rent, utilities, office supplies, insurance, and small tools and equipment. Other income are income amounts that do not come from a company's main revenue generation streams. Examples of these are interest, rent, and gains resulting from the sale of fixed assets. Other expenses are expenses that do not relate to a company's main business operations. For example, interest expense, fraudulent charges, and losses from disposing of fixed assets. The second source, the balance sheet, is the financial statement that shows a company's assets, liabilities, and shareholder equity at a specific point in time. The balance sheet accounts include the following. First are assets, a resource with economic value that an individual or a corporation owns and controls with the expectation that it will provide a future benefit. Common examples are cash, bank accounts, account receivables, inventory, prepaid expense, and fixed assets. Second are liabilities, something a person or company owes, usually a sum of money. These are to be settled using money, goods, or services at a later time. Examples are credit card, accounts payable, tax payable, salaries or wages payable, loans, and mortgages. Third is equity. Owner's equity or shareholder's equity represents the amount of money owned by the owners in the business. After deducting liabilities from creditors out of total assets, what's left will be equity. Examples are owner contribution, owner capital, owner drawings, shareholders' contribution and distribution, common shares, additional paid-in capital, and retained earnings. Organizing the chart of accounts mostly takes into account how you want your profit and loss statement and the balance sheet report to look like. This makes it easier to understand, analyze, and use your financial reports more efficiently for decision-making purposes. This concludes our 5-step bookkeeping series. Should you have questions or suggestions, let us know in the comments. For more tips and accounting tutorials, hit like and subscribe to our YouTube channel.